What's up guys, welcome back to my YouTube channel, and today we're going to look at trading boom and crash in 2025. This is the strategy that I personally use to trade boom and crash. So guys, I hope this helps a lot. I've been teaching the strategy now for almost a year, maybe 2 years now. I can't even exactly remember, and it's still working super well, and people in the group have been having great success with it. It's a free Telegram group in the description. You can join anytime. People have discussions on trading boom and crash and Nasdaq and everything that I trade in there, so you're more than welcome to join. But let's quickly get into this. Let's go through the steps again on how to trade it. I'm currently on boom 300. You can do this on any pair, boom 1000, crash 500, whatever you want. You can use it there. Just make sure that you follow the steps correctly. If you have a crazy 1 minute strategy that you like to trade with in identifying when to buy a boom pair or sell a crash pair, you're more than welcome to use it with this strategy when you go down to the smaller time frames. But I'll teach you how to go from the 1 hour down to the 5 minute and how to identify that correct entry that you need. Just a disclaimer, remember guys, you're not always going to have a 100% success rate with any trade. It's about catching more pips than what you lose. So you want to always have a positive amount of pips that you catch versus a negative amount of pips that you lose. So remember, this is trading. This is how the banks trade. This is how ICT trades. This is those type of things. Don't come here to this channel thinking that you're just going to find a 100% quick success scalping strategy that some other people try and teach. This is proper trading, and you're more than welcome to listen and take this into account, and hopefully leave some comments down below on if you have any questions or if you have any comments on the strategy. So let's quickly get into it guys. So I like to wait for a high to be broken. So when I'm trading a boom pair, I'm going to look for buys. Okay, so we need to identify when a solid high is broken. Okay, so you can see we were in a sell trend, but we then had this high being broken over here. So when a high is broken, I want to identify where it turns around and where it's going to buy again for the next leg up. Okay, because when it breaks a high, we're going to move into this higher high, higher low situation upwards until it one day sells off again. So we want to catch these turnaround spots for this buys again. So when boom goes up and it turns around and comes through this high again, we can then take our Fibonacci tool from the bottom of that movement to the top of that movement over there. I'm going to quickly go into the settings of the Fib so that you can pause the video and write it down or put it into your Fib settings so that you have exact same Fib as me. So you can pause it and then use that settings as well. Okay guys, so we then have this movement going up, and now we want to identify an order block with a fair value gap or just an order block in the 50 to 78 area in the Fibonacci. We want to identify an order block in that area over there. So we can see there's only one over there, a little red candle. That is your order block. If you want to know more about order blocks and fibs, you can go into my YouTube channel. I have 2 videos there that explains how an order block can be identified and how a fib works. So you guys can go check it out over there. So now that we have this order block, we will then go down to the smaller time frames and identify where we can enter this trade on a lower time frame. Okay, so we have this 5 minutes over here. So now we're in this gray block and we want to identify where to buy. So guys, boom and crash, it moves a lot, right? And it is sometimes scary when it moves a little bit into your stop loss, but that's fine. That's why, not into your stop loss, into the negative, sorry. But that's why we have a stop loss. So now you'll see when it goes up, it creates these little highs over here. Okay, and it breaks them, indicating we need to wait for it to come back and retest an order block. So this is much more simple in terms of identifying. We don't really use our Fibonacci as much on the smaller time frames, but we're just going to identify these little order blocks. So when it comes back again, we're going to mark these red candles over here as an area of interest or an area where we want to buy. So when boom comes back into this area, this is probably the best time to buy for a sniper entry so that we can then take this big leg up towards the upside into a big amount of profit. So this is where I then will put my trade in over here. Let's quickly get our long tool in here. Just going to mark this too. So we're going to use our long tool over here, and we will probably buy at the top of this order block with our TP, wherever you want to place your TP in a positive risk reward ratio, but I can show you guys where to place your TP now. But your stop loss will always be below this low. Okay, so below this low over here that it made on its first leg up. So now your stop loss is over here. You'll have your movement on the 1 and the 5 minute going in here, moving, eventually going up into profit. So if we go back onto the 1 hour, I can quickly show you guys where your TP will be placed. Okay, so we're going to move from the bottom to the top. Your TP, a very safe TP, is where the top or that high was previously. So the top of this Fibonacci tool right over there. So you'll have your entry over there, have that big movement up here. That is a massive amount of pips that you're grabbing with a very, very tiny stop loss. And that's exactly how I like to trade, with very, very little risk and a massive reward, especially trading correctly, trading how the banks and ICT and the institutions trade. So let's look at another example for you guys so that we can just get these examples going and you guys can be happy. So we have this high being broken over here for the next leg up. You can see it's broken. Now we need to identify from the low to the high where we can find an order block in that area. Okay, so this whole red candle situation here is your order block. So those 3 red candles over there will be your order block area. So now this will be the zone where we can try and identify that buy up. So if we go down again to the 5 minutes to identify a nice tight sniper entry, we will go into this 5 minute over here. Okay, so now that we're here, we're going to wait for a great trade over here. So now you'll see that we have this high being broken over here. So there it goes down into that order block that we have on the higher time frame. It comes back up again, breaks the little high, and now we identify these 4 candles over here as your order block. Remember, if you guys go check out my other video as well, 3 or 4 or 5 red candles next to each other is an order block together. Okay, so that is perfectly fine. So now your stop loss will be super tight. Again, I'll probably enter at the top of that order block over there. Stop loss just below that low as previously discussed. And now we're going to go back to the 1 hour to find our take profit area. Okay. Fib from high to low. Take profit will be on that high again, as previously explained. So look at that risk reward, 7-to-1 risk to reward ratio, which is insane. It's just crazy how you can have these trades with such a small stop loss. Okay, now we're going to go again to the next one. And this next one's going to be interesting. I'm going to show you guys an example of one that didn't work out. So now you'll see we will have a 14. Let's say we caught those 2 buys. We made $14 because of the 14-to-1 risk reward, whatever. So let's say we lose one. We're going to still have 13. I'm quickly thinking this out of my head, but we're still going to have $13 of profit if we lose that $1 on the 3rd trade. And that's how you guys must think about trading. You mustn't think, oh, I lost one. The strategy must be working. It's crap, blah, blah, blah. No, it's trading. You're going to have losses, and that's why we use stop losses. But we're going to move up our Fibonacci like that. It broke this high here. This is why we are looking for the next buy up. Okay. There's the high that was broken. Fibonacci, just like I explained now, from the low to the high. And we're going to identify the order block. So in the 78 and 60, between the 50 and the 78 zone, we have an order block there that we're going to look at. And we're going to have one here that we look at for those buy entries on the 5 minute. Sorry. Let's just get that perfect. Okay, let's delete. Let's go to the 5 minute. Okay, now that we're on the 5 minute, you'll actually see a perfect example of a trade that you can miss out on, that you don't have to take because it never broke a high. So in this first gray block, you'll see that we probably would identify this high as the high that needs to be broken to identify that, like, let's say this order block over here. But it never broke that high, which indicates we don't have to buy from this area. There's no indication for us to buy. So this is a tick for us in the box of not taking a trade and losing any money. But if we get into this gray block over here, we will find that we have a high being broken over here. So let's quickly delete. You'll find that we have a high being broken over here. It comes down into this order block area, those consecutive red candles over here, for example, and it does go up into some profit. But obviously, it doesn't hit your profit or your take profit at the top. It goes into some profit and then comes back down to hit your stop loss. Now, if you're a very, very risk adverse trader, you would have probably moved your stop loss to break even after being at this amount of pips up, or otherwise you would have taken your small stop loss over here at the bottom, which is also perfectly fine. I would have probably left my stop loss at the bottom and it would have hit, and it's one of those things. So it did eventually go up again, as you guys can see, but we are not going to revenge trade it. We're going to take the stop loss on the channel and we're going to move on to the next trade when we see it. So guys, you can see as an example of something not fully working out, but it's one of those things and you need to use your stop losses and move on to the next one. Don't try and revenge trade these type of trades. So guys, I hope this helps a lot. Let's see your profits in 2025. Come to the group and come and share your analysis on the strategy, and I like to see it, and I hope you guys have a 2025 full of profits. And let me know down in the comments below if you have any questions or any suggestions. I'll check you guys in the next one.